Hey, what's going on, guys? So I wanted to hop on here quick and talk about this most recent crypto crash and explain why I think it's one of the best buying opportunities that we've seen in months. Bitcoin and Ethereum are both down around 15% from their most recent highs, which has also led to some pretty significant sell-offs in altcoins. But if you guys just focus on the numbers here and ignore what everyone's saying online, it makes it a lot easier to make decisions. So in this video, I'm going to go over two very important signals that I've noticed in this most recent crypto dip, and then I'm going to explain some ways that you guys can capitalize on the next move up. So if you guys are new to the channel, hit that subscribe button and make sure to turn on the notifications so that you never miss any urgent videos like this, and let's get right into it. All right, so reason number one is a bit more technical, and it deals with the simple price action of crypto. And for this example, I'm just going to use Bitcoin because I would have to say the same thing over and over again if I just looked at all the other altcoins. So if you're invested in cryptos that do have a high correlation to Bitcoin, the setup is probably fairly similar. So very quickly, let's just zoom out and see how much of a dip that this really is. So here's the 1 year chart on Bitcoin futures, and you can see that this 15% correction barely made a dent. But the most important thing that you want to notice here is that we're still holding above our 3-month trend level that's represented by that blue line. As long as Bitcoin can hold above that 3-month trend level on these sell-offs, which is right around 41,000, I'm going to be buying these dips all day long. So when we have sell-offs like this, where we hold above the trend level, no matter how much we sell off in, a day or two, that's usually just panic selling, and those quick spikes are only going to last for a couple days. But we're already starting to see Bitcoin regain some support here as volume is starting to slow down. So if you do look at the volume table right here, you can see that today's volume is just around 70% of what it normally is. That's compared to the 30-day average. So that's what you want to see. During these sell-offs, when we start to consolidate after a leg down, you want to see the volume start to slow and then start to increase on the next move up. A quick flash crash like this is going to make most retail investors panic and sell into all the fear. But if we zoom out here and see where we are even after the crash, we're still way above our trend level, and we're starting to see volume start to slow, which is very bullish. When any asset goes up 30, 40, 50% in just a couple weeks, like Bitcoin, Ethereum, and a bunch of other altcoins just did, the positioning gets extremely crowded as people continue to FOMO in. So when things like this correct and everyone's just buying as it continues to move higher, if people have zero protection against that position, then they're just all gonna start dumping at once and dump in size like what we saw yesterday. And that type of positioning is going to take us to our next point here. So I'm going to show you how people are positioned after the sell-off. So this is what's really important, how people reacted to that dip yesterday and into this morning. So what we have right now is something that I have not seen in a very long time, especially with Bitcoin. So this is a big buy signal for me. If you guys have been following me for a while, you know that I have a big focus on the volatility of the asset, along with the implied volatility premium or discount that goes along with it. And I know that probably sounds super confusing, but it's actually a lot easier to follow than you might think. So let me explain. So this is a crypto quant tool that I use from Hedgeye Risk Management. And if you want to use it, you can just head over to their website and find all the info there. But out of all the data on this page, I want you to focus on this volatility table. So here we have the realized volatility of Bitcoin over a 30-day period that's represented by this line. So this has continued to fall as Bitcoin has rallied higher. But then on top of this, we have the implied volatility that has continued to move up with Bitcoin's price. So these two moving together has resulted in a huge implied volatility premium of around 60%. And this is something that you rarely see, especially with Bitcoin. I honestly can't remember the last time that I've seen a number like this so high. So what this tells you is that the volatility, the actual realized vol, has continued to break down during the move up in Bitcoin, which is very bullish. That's exactly what you want to see. But at the same time, especially during that last correction that we just saw, implied volatility shot up. So when you see implied volatility continue to rise as the realized vol comes down, that's what tells you that investors are buying up put protection to hedge their portfolios. And this is pretty common, but what really matters is how aggressively they're hedging their positions. So that's what that 60% number tells you. if the implied volatility number is that high, and for reference, anything over like 20 is considered pretty high. So this tells you that investors have a very bearish positioning. So why would that be a good thing for us, right? Why is bearish positioning a good thing for the market? Well, first off, it makes it a lot harder for any significant sell-off to continue because markets rarely crash when everyone's positioned for it. What causes market crashes and what causes crashes in really any asset, it doesn't matter what it is a leverage and liquidity problem where people are just running 100% net long and they have no protection. So when something goes against them, that's when they have to start selling everything right away, and that's what causes a crash. So right here, people are not running 100% net long. People are very hedged, especially with Bitcoin. So that's gonna make it a lot harder for Bitcoin to just continue to sell off, especially at the rate that we saw over the past couple days, because people are already positioned for that. So if that implied volatility number was negative and we had, say, a negative 20 or 30% discount, that is when it could get ugly very quickly because nobody has any protection on. So when people are buying up protection with options like what we're seeing right now, that makes it much harder for anything to crash. And the second reason why this type of positioning is bullish is because this is what fuels the next move up. This is what we've seen in the stock market itself, just for equities with the S&P, the NASDAQ, the Dow. We've had huge implied volatility premiums literally all summer because people continue to bet against the market and they're hedging for that big leg down that just never comes. So that is what continues to fuel the move up, because once they're wrong, once they get caught off guard, that's what forces them to cover their positions and then chase much higher, which just fuels the melt up or whatever you want to call it. So after this crypto correction, people are nowhere near net long enough. And this is where we have the opportunity to capitalize before they get squeezed out of their shorts and before they're forced to buy much higher. From where we are right now with the volatility setup and the positioning in the market, I think that we're going to see a huge move higher over the next couple weeks. And this is not my opinion or, what I want to happen. I'm not biased when I'm saying this. I'm just showing you what the market is telling us and what all the data suggests is going to happen next. So personally, I've been buying Bitcoin and Ethereum and some other related cryptos like Cardano and Chainlink directly, but there are some ways that you could have crypto exposure just through your brokerage if you wanted to buy stocks. So an example, one that I like to buy is MicroStrategy, ticker symbol MSTR. This trade's pretty much in line with Bitcoin since they own so much. And then you have another option through an ETF. A popular one is Blockchain ETF, which is ticker symbol BLOK. And this tracks all of the companies in the market that are associated with blockchain technology. And then if you didn't want to buy these crypto stocks, you could just buy ETFs from Grayscale that directly track Bitcoin and Ethereum. So for Bitcoin, the ticker symbol is GBTC, and for Ethereum, it's ETHE. For those two specifically, depending on your brokerage, there might be some fees associated with it. I use TD Ameritrade, and I know that they charge me $6.95 to buy and sell. So, I mean, it's not a huge deal. It's probably still less than what you'd pay with Coinbase if you continue to buy it. But just make sure that you double check before you buy. So that's it for this video. I wanted to just show you guys the numbers and keep it quick and straight to the point. If you're on social media, everyone's going to have their own fundamental reason on why crypto's crashing and what they think is going to happen next. But most of the time, they're just completely making something up. So if you just stick with the numbers and look at what the market's telling you through the positioning, that makes it a lot easier to make decisions. So if you guys did find that video helpful, please do leave a thumbs up and subscribe to the channel, and I will catch you guys in the next one. Peace.